Welcome back to the channel, guys. I'm your host, Buckning, and today we are going to talk about international stocks and maybe a frequency on purchasing stocks. This question or this topic came upon a comment that I got in my last video. If you haven't checked it out, I'll link it somewhere in the tag. But welcome to the channel where we talk about investing, specifically dividend investing, where we build a portfolio, a dividend portfolio. And what that looks like, in definitely in my perspective, and we could talk about finances, stocks in general, and just anything that really does with finance and building wealth, for the most part. But if you're new to the channel, welcome. If you're not, welcome back. And if you're new to the channel, don't forget to maybe consider hitting subscribe, just so you don't miss the videos that come out 2 to 3 times a week. And maybe consider hitting that like button if you find any value throughout anywhere in this video. But yeah, so we're just gonna do a little update here because it is Tuesday as well, where every Tuesday I invest $100 into the Wealthsimple Trade account, and then when it becomes available to trade, I do make a video on that day on the stock I am buying for the month of September. If you haven't seen that video, I'll leave a link in the description below. But let's get right into it. So just a quick update on the day, because we always like updates. So currently in the portfolio, we own 3 shares of BNS, which is Bank of Nova Scotia, and the portfolio is up 0.3%, up 63 cents. And we did get $10 from a referral that my friend had gotten for me for the week, because we have been investing for a week, so there's a difference, 0.3 here, and 0.32 for the week, and we're up 68 cents, which is great. It won't change from the month because I haven't been using this account. Well, I haven't actively used this account for a month, 3 months, or a year, but overall it's going to be the same as the 1 week, which is 0.32% up. So Bank of Nova Scotia, that is a stock of the month as well, if you're curious. But yeah, just to give you guys an update. So before we get into the question, we are just going to fund this account, because like I said, every week, every Tuesday, we will be investing $100 into the account, so that we can invest by Friday morning. And so when you do, it's pretty easy. When you do it, it's on the way. Your deposit is being processed and will be available to trade in 3 business days. I don't want to earn cash to trade because the link is in the description below. But yeah, we're just going to leave it on the all, actually. So once you make a transfer into the account, you will get an email, which I will pop over here, which confirms the day that it'll go in roughly, and hopefully it is Friday because I'm filming this video a bit late, but that's okay. And so yeah, before we get into the question, another little update I'd like to do is the trackyourdividends.com, where we take a look at the portfolio, where you can look at the portfolio value, the dividend portfolio, for the most part, the dividend yield currently as of today, and then yield on cost and the annual income. So portfolio value is the value of all your stocks combined in the portfolio. 6.48% is the dividend yield as of today, as of like right now. Markets are closed right now, but as of today at the end of day market price. And yield on cost is my actual yield from purchasing the stock at a lower price than what it is today. So these two numbers do change, and they reflect your actual yield on cost. So my cost of entry when it comes to earning dividends, compared to someone who's buying it today. Someone who's buying it, a Bank of Nova Scotia stock today, will get a yield of 6.48%. Whereas for me, who purchased it like last week at a lower price point of the stock price, earns a yield of 6.51. So hopefully that makes sense. And the annual income currently is $11. If we scroll down here, you can see the ticker symbol, bns.to. I own 3 shares. The current price is $55.53. The average cost, my cost, of which I'm buying at is $55.30. That's the average. Currently, the profit is 68 cents. Like I said, dividend yield as of today. So if you were to buy today, your yield would be 6.48%. And my yield based off of buying last week at a lower price is 6.51%. And again, annual income is $10.80. So yeah, that is the Tracker Dividends tracker that I use. And so today, we got a question that was in the comment section below from last week's video, and I'll put it right down here somewhere. It comes from Fifi Finance, and her question was, any pointers on buying stocks outside of your home country? And then a second part to the question is, how often would you normally trade? So I'll answer the first one, which is international stocks. So any pointers on it? Not really. I guess a pointer would be is the presence of the company. So before we get into kind of the presence of the company, because that sometimes doesn't make a difference, when it comes to international stocks, the New York Stock Exchange, the NASDAQ, and the Toronto Stock Exchange are the ones I'm very familiar with. However, there are international companies, for example, that are traded on the New York Stock Exchange, on the NASDAQ, and I don't believe there's any on the Toronto Stock Exchange. Mostly the New York Stock Exchange and the NASDAQ. And some of those companies, for example, would be Alibaba. If you know that company trades on the New York Stock Exchange as a foreign company, but is able to buy to retail investors on the New York Stock Exchange. They do have an Alibaba on the Hong Kong exchange, so that's over there. And then another one that people might be familiar with is Tencent. Tencent is a company that is related to PUBG, which is a video game, very popular video game, and they are on the OTC market. If you don't know what OTC is, it's over the counter, so it's not governed by any securities or anything like that. It's literally you dealing with the company and buying shares from them. And so that's another company that you can purchase, in your home country if you're in North America. But I do believe you can purchase some of these, from my knowledge, on maybe the Frankfurt exchange, the Nikkei, which is Japan's exchange. And then another one maybe you haven't heard of that trades on the New York Stock Exchange in North America is Baidu. Baidu is the counterpart, the counterpart of Google in Asia. So it's their largest search engine in China, and they trade on the New York Stock Exchange. There's a list of them that are on the New York Stock Exchange or the NASDAQ, based on what kind of company it is. Any tech company ends up on the NASDAQ, and then any other holdings company or company in general ends up on the New York Stock Exchange. So for myself, do I own any international stock? For myself, no. Would I like to? Yes. Well, I shouldn't say that. I do own a few, I guess, positions in international stocks, because it's difficult to purchase individual shares on the New York Stock Exchange or the NASDAQ or the OTC markets. But a way that if somebody has interest in really holding positions in foreign companies or international companies, the safe way to do it, and the reason I say safe, this is totally my opinion, is either through mutual funds or ETFs, because they give you a wide variety into these companies. For example, like Samsung, Alibaba, Tencent. And so that is the safest way. And the only reason I say I shouldn't say safest, I should say the least risk involved in buying international stocks. Because the thing with international stocks is that the presence, for example, the presence in the company is mostly overseas, And so any news or anything that happens with that company, the information typically won't make it over here unless it has a large presence. For example, Samsung. Samsung is very well known in North America, but also very well known in Korea. But you can't buy Samsung stock on the New York Stock Exchange, on the NASDAQ. It's not there. The only place that you can buy Samsung shares, like full shares or in the company, is if you have a Korean stock exchange trading account. Or I do know that in the US, because I'm Canadian, because I'm in Canada, in the US, I know there are some platforms that allow you to buy international stocks, which is great, which is awesome. But the pointer, in my opinion, for buying international stock, for me, I don't have that ability to buy international stock other than through the channel of mutual funds and ETFs, which I don't own, but I do own mutual funds, very aggressive mutual funds that have exposure internationally in not that emerging markets, sorry, and Asian Pacific, where Samsung's in there, Alibaba's in there, those massive companies overseas. I do have a stake in or a position in, but not like full individual shares. So when it comes to that, be very, very careful. Go through a safer channel because there's a lot of factors that play into that, which are currency exchange. We have to take that into factor. Information. So any news that comes out of these companies, are they prevalent in where you are at? Because typically, let's say if Google or the parent company Alphabet comes out with a board meeting or financials or things like that, they state that to the public. Whereas Baidu, you have to do your own information research on that company and what they're doing, and it's more involvement when it comes to international stocks. And so, for myself, I don't own any personal international stocks. I wish I could. I wish I would, because in my opinion, I'd probably go buy some Samsung shares because they do pay a dividend, or invest in a Korean bank or things like that, based off if I'm willing to do the research myself. So hopefully that makes sense. I do believe the most safe way, in my opinion, to have a position in international, like I said, is mutual funds and ETFs. So do your research on that, because I don't have a lot of experience in the international stock selection or buying, but I would like to, absolutely. But I know in the US, I know Schwab or Fidelity do give you that option to buy international stocks, and correct me if I'm wrong. So hopefully that answers your question, Fifi Finance, on the pointers of buying stocks outside of your home country. Do your research, most definitely. If you want a safe way to do it, go through mutual funds, go through ETFs. That gives you exposure to that side of the world globally, and it's more in the hands of the fund manager. So hopefully that answers your question and adds some value for you. And then your second question: how often would you normally trade? So that is a great question. A lot of people ask this question. When it comes to, how often, how frequent you should invest, in my opinion, to give you an idea of what I do, obviously you can see in this video, in these videos, that I'm investing $100 a week consistently, and I'll keep on doing that until I feel like I'll put more and things like that. Previously, for example, when it comes to building a portfolio, usually I would just invest every paycheck or something like that. I take a percentage. I don't take a value. I take a percentage of whatever my gross pay before taxes, and I'll put that into an investment. So that would happen on a bi-weekly basis. But really, it depends on your strategy and what you're trying to achieve. Really figure out where you want to be. What's your goal? What's the end game for you when it comes to trading, and how often you should do it. Obviously, here with dividend investing, specifically for this portfolio, I'm doing $100 a week. So weekly, I will be buying stock or raising my position in certain companies to get that dividend. And so it's totally it's totally up to you, because everyone's book slash portfolio will be different. Even if, let's say you and me bought the exact same shares at the exact same time, believe it or not, even if we both hit market price to buy something, our price might be different, because the market changes like that, the price changes like that. And so we just have to make sure that, the frequency of investing over time is totally dependent on what you're trying to achieve. So really figure that out, because you might miss out on some growth. You might not, right? Somebody who's investing now might be investing at too of a high price or too low price, but we can't predict the market, and you can never ever know when the highest point of something is, and the lowest point of a stock is. And so it's totally dependent on your strategy, I guess. And so that's my take on it. Hopefully that does help. Fifi Finance, thanks for the question. I really do appreciate it. And for everyone else, I hope that helps. I hope that adds clarity, adds value. If it did, like I said in the beginning of the video, consider subscribing, because we'll be putting 2 videos out a week, and hit that like button, because this is the channel where we invest $100 a week and build a dividend portfolio right in front of your eyes. So yeah, that's pretty much it for the video, guys. So thanks for watching, and we'll see you in the next one. Bye.